Ever wondered how you can save more on your taxes? Well, you're in the right place. Today, we're going to explore some simple tax strategies that everyone should know. Whether you're a student juggling tuition fees, a working professional climbing the career ladder, or a small business owner navigating the complexities of entrepreneurship, understanding these basic strategies can be a game changer. Now, ready to dive into the world of taxes? Don't worry, we'll keep it simple and engaging. First off, let's talk about tax brackets. Tax brackets are like buckets. The more income you make, the more buckets you fill. But here's the thing, only the income in each bucket is taxed at the rate for that particular bucket, not your entire income. It's a common misconception that if you're in the highest tax bracket, all your income is taxed at that highest rate, but that's not the case. For example, let's say you're a single filer who makes $75,000 a year. You're not paying the highest tax rate on the full $75,000. Instead, the first chunk of your income, let's say up to $20,000, might be taxed at a lower rate. The next chunk, from $20,000 to $50,000 at a slightly higher rate, and only the income above $50,000 at the next rate up. Remember, only the income in each bucket is taxed at that bucket's rate. Next up, claim all available deductions and credits. There are many deductions and credits available to taxpayers, but many people miss out on claiming them. Some of the most common deductions include mortgage interest, student loan interest, and charitable donations. Credits, on the other hand, directly reduce your tax bill. Some common credits include the Earned Income Tax Credit, the Child Tax Credit, and the Education Credits. Be sure to review your tax return carefully to make sure you are claiming all of the deductions and credits that you are eligible for. Now let's talk about tax credits. These are even more exciting. Tax credits directly reduce the amount you owe to the taxman. Think of them as gift cards that you can use at the checkout of your tax payment. So, if you have a $1,000 tax credit, it would directly reduce your tax bill by $1,000. So, a $1,000 tax credit would reduce your tax bill by $1,000. Big difference, right? Now, let's talk about saving for the future while saving on taxes. Many of us dream of a comfortable retirement, and one way to get there is through smart tax strategies. You see, the government wants to encourage us to save for our golden years, and they do this by offering tax benefits for contributing to retirement accounts like a 401k or an individual retirement account, also known as an IRA. When you contribute to these accounts, you're essentially lowering your taxable income. Think of it this way, if you earn $75,000 a year and put $6,000 into your IRA, you're only taxed on $69,000. That's a reduction in your taxable income, which means a reduction in your overall tax bill. Plus, you're building a nest egg for your future. It's a win-win for your future self and your current tax bill. Moving on from retirement savings, let's explore other tax-advantaged investment accounts. In addition to retirement accounts, there are a few more ways to save on taxes while also planning for future expenses. These include health savings accounts, or HSAs, 529 plans, and covered education savings accounts known as ESAs. Let's start with HSAs. These accounts allow you to contribute tax-free dollars to cover qualified medical expenses. This means that the money you put into an HSA is not taxed, and you can withdraw it tax-free when you need it for medical costs. This can be a smart way to save for future health expenses while also reducing your current tax bill. Next, we have 529 plans. These plans allow you to save for future education expenses with tax-free growth. You can contribute after-tax dollars to a 529 plan, and then withdraw the money tax-free for qualifying education expenses. This includes tuition, books, and other education-related costs. Finally, we have ESAs. Similar to 529 plans, ESAs allow you to save for K-12 education expenses with tax-free growth. This can be a great way to plan for your child's education while enjoying some tax benefits. Remember, these are just a few examples of tax-advantaged accounts. Each one has its own rules and benefits, so it's important to do your research or consult with a tax professional to determine which is the best fit for your financial situation and future goals. Having covered tax-advantaged investment accounts, let's now turn our attention to tax-efficient investments. Not all investments are created equal in the eyes of the taxman. Some, by their very nature, are more tax-efficient than others. For instance, municipal bonds. These are often exempt from federal and sometimes state income taxes. This means that the interest you earn on these bonds is not subject to tax, making them a tax-efficient investment option. Next, we have index funds. These are mutual funds that aim to match the performance of a specific index. They tend to have lower turnover than actively managed funds. Lower turnover means less buying and selling of securities, which can help reduce capital gains taxes. Remember, when you sell a security for more than you paid for it, you're subject to capital gains tax. So a fund that buys and sells fewer securities can potentially result in a lower tax bill. But as always, it's crucial to remember that everyone's financial situation is unique. What works best for one person might not work for another. Therefore, it's always a good idea to consult with a financial advisor to determine the best tax-efficient investments for your individual situation. This way, you can ensure that you're making the most of your money while also keeping your tax bill to a minimum. So, what have we learned today? We've delved into the world of tax brackets, learning that the more you earn, the more buckets you fill, with each bucket taxed at its own rate. We've discovered the golden tickets of tax deductions and credits, and how they can significantly reduce your tax bill. We've also seen how contributing to retirement accounts like a 401(k) or an IRA can lower your taxable income. Remember, understanding these basic tax strategies can save you money, so start implementing them today. Before we wrap up, we'd like to remind you that knowledge is power, especially when it comes to your finances. By understanding tax strategies, you're taking control of your financial future. It's time to put these strategies into action and see the difference it can make in your financial life. Remember to revisit these strategies each year as tax laws might change. Staying updated can help you maximize your savings and benefits. And now, if you found this video helpful, we'd really appreciate it if you could give us a thumbs up and share it with others who could benefit from this information. It's your support that allows us to continue providing these educational resources. This has been P Finance, empowering your finances $1 at a time. Thank you so much for watching, and until next time, keep saving and investing wisely.